Fine. So see this. Test your knowledge questions on input tax credit, chapter number 8, module 2. Question number 1. Xenon Private Limited, a registered supplier in Agra, is engaged in manufacture of taxable goods. Goods valued at 10,50,000 were supplied by the company to Freshbite Private Limited, a registered supplier located at Ferozabad, without the cover of an invoice, with a fraudulent intent. Without the cover of an invoice. Since the company evaded tax by not issuing invoice for the supply, a show cause notice was issued by the proper officer under section 74. So 74, demand and recovery, so says that a notice issued under section 74 in case of short payment of tax, non-payment of tax, wrong availment of ITC, wrong utilization of ITC, erroneous refund on account of fraud, collusion, willful misstatement, suppression of facts, or contravention of provisions with an intent to evade payment of tax. So in this case, so this person has voluntarily not paid GST. So this supplier, Freshbite Private Limited, were supplied by the company to Xenon, a registered supplier. He is engaged in manufacture. So they have not reported it in GSTR1. Had they reported it in GSTR1, why it is a fraud case? There is no guilty mind present. So therefore they have not reported it in GSTR1. So then it is recovered. So naturally it will not come in GSTR2B. So therefore recipient cannot avail ITC with respect to that. It is given in blocked credits also, but logically ITC cannot be availed with respect to this. The company paid the tax, interest and penalty. Examine ITC entitlement to Freshbite. No, Freshbite cannot take ITC. So even though that is blocked credit is there, but even you can write it like, so as the tax details are not reported by the supplier in GSTR1, it will not come in GSTR2B. So therefore recipient cannot take ITC. That way also you can write, or you can also write it like blocked credits point. Then next one, question number 2. Flamingo Limited is an airlines providing passenger transportation services by air. The company offers meals of premium quality to passengers on board the aircraft. The value of such meals is compulsorily included in the price of the air ticket. The company avails outdoor catering services of Dhaniyaram Private Limited for providing such meals to its customers. Examine whether Flamingo Limited can avail ITC on such outdoor catering service availed by it. So they are into the business of transportation of passengers by airlines. Okay, they received inward supply related to outdoor catering or anything. Okay, now generally outdoor catering is a block credit, but they can take ITC with respect to outdoor catering because we have an exception. If inward supply is part of the outward supply. So food and beverages, outdoor catering, beauty treatment, cosmetic surgery, plastic surgery, hair transplantation, life insurance and health insurance are blocked credits. Generally ITC not available with respect to that. But we have some exceptions. If it is incurred under a statutory obligation, it is available. This is not related to that. If inward supply, outward supply is in the same category, it is available. This is not related to that. But if inward supply is part of the outward supply, yes. So in their outward supply, they are including these meals also in the price. So which means that inward supply is part of the outward supply. So they can take ITC on that outdoor catering services. That is the answer with respect to that. Even though it is a block credit, but it is covered under the exception. Therefore, ITC, Flamingo Limited can avail the ITC on outdoor catering services. That is with respect to this. Then question number 3, Jumbo Sales Private Limited, a supplier of ready-made garments, announced buy one get two free offer on men's t-shirts on Diwali to boost its sales. You are required to advise a company on the availability of ITC in respect of inward supply used in relation to such supply. Generally, there is one blocked credit, that is, if inward supplies are given as gifts or free samples, then it is block credit, ITC not available. However, there is an exception to this given by CBIC circular, which says that if the gifts or free samples constitute supply under 71C, so then we can, or 71A, we can take ITC on the gifts or free samples purchased. So in this case, when it is buy one, so get two free, that will be treated as a single supply, like composite supply. Now in that case, even though two are given for free, but as these three will come under a single supply, so therefore On the inward supplies, they can all three t-shirts, they can take ITC with respect to that. Okay, that is the answer for this. So this is a CBIC circular which we need to write. So taxability of such supply will depend upon whether it is a composite supply or mixed supply. Therefore, ITC shall be available to the supplier for the inputs, input service and capital goods, even though it is a block credit. Then next question, question number 4. A garment factory receives a government order for making uniforms for a commando unit. This supply is exempt from tax under a notification issued under section 11 of CGST Act. The fabric is exclusively procured for such supply, but thread and lining material for the collars are the ones which are used for other taxable products of the factory as well. The turnover exclusive of taxes of the other products of the factory and exempted uniforms in July is rupees 4 crores and 1 crore respectively. The ITC on thread and lining material procured in July is 5,000 and 15,000 respectively. Calculate the amount of eligible ITC in respect of procurement of thread and lining material. Simple. So outward supply, partly it is taxable and partly it is exempted. So the turnover of other products of the factory and the exempted uniform is 4 crore and 1 crore respectively. Then, so the inward supplies are common ITC 5,000 and 15,000. So 5 plus 15, 20,000. How much ITC can be taken? To the extent of dutiable or taxable we can take. So 4 by 5 we can take credit. So therefore 5,000 plus 15,000, 20,000 into 4 by 5 we can avail ITC. So that is 16,000 rupees can be availed as ITC. 16,000 rupees can be availed as ITC. Remaining 4,000 rupees will be reversed. But how it works is that first we will take the credit of 20,000. Availment of ITC 20,000 in GSTR 3B. Thereafter reversal with respect to exempted. What is that reversal with respect to exempted? 20,000 into exempted to total. That is 1 divided by 5. So 4,000 will be reversed. So the net ITC available for utilization will be 16,000. So that's how we need to do the computation. And we need to give a reference of 17 subsection 2. When inward supplies are partly used for taxable and partly used for exempted, the proportionate ITC is available to the extent of taxable. And as per rule 42, first we will avail the ITC, thereafter we will reverse the proportionate pertaining to exempted. So the remaining is the net ITC available for utilization. Then, so if it is in the previous question, whatever t-shirts they are purchasing fully given for free, then they cannot take ITC because that is not a supply. When it is not a supply, then ITC not available with respect to that. Then question number 5, Ceramity Limited has following units. Factory in Tumkur, Karnataka, turnover of 27 crores in financial year 2021. Service center in Hyderabad, Telangana, turnover 1 crore in financial year 2021. Service center in Chennai, Tamil Nadu, turnover 2 crores in financial year 2021. Ceramity Limited's corporate office functions as an input service distributor. It has to distribute ITC of 9 lakhs. Of this invoice, tax of 3 lakhs pertaining to technical consultancy for Tumkur. So whenever the input service pertains to one unit, the entire credit will be distributed to that unit. So 3 lakhs will be fully distributed to Tumkur unit. Whereas remaining 6 lakhs, that 6 lakhs distribution, okay. So 3 lakhs pertains to technical consultancy of Tumkur. So remaining 6 lakhs, what we will do? We will distribute to all the 3 units, okay. So you can see the answer here. 3 lakhs distributed to Tumkur unit. Remaining 6 lakhs will be distributed to all 3 units. In what ratio it will be distributed? 27:1:2. In the ratio of 27, 1 and 2, that is 30. So 27 by 30 for Tumkur and 1 by 30 for Hyderabad, 2 by 30 for Chennai. And they need to give ISD invoices, and for distribution of this credit, based on the strength of these ISD invoices, the recipient units can take ITC. Also, this ISD, input service distributor, should furnish the details of the credit distributed to their divisions in GSTR 6 by 13th of the month following every month. Then, question number 6. A registered supplier of taxable goods supplied goods valued at 2,24,000 inclusive of CGST 12,000 and SGST 12,000 to Mohan Limited under forward charge on 15th August, for which tax invoice was also issued on the same date. The inputs were received by Mohan Limited on 15th August. Mohan Limited availed credit of 24,000 on 20th September by filing form GSTR 3B for August month. However, Mohan Limited did not make any payment towards such supply along with tax thereon to the supplier. Is Mohan Limited eligible to avail ITC on such supply? So, first of all, what happened is that, so a registered supplier has supplied goods valued at 2,24,000 to Mohan Limited. So, GST component is 12,000, 12,000, 24,000 on 15th August, for which tax invoice was also issued on the same date, 15th August. And they availed the credit of 24,000 for August month. They availed ITC on 20th September by filing 3B. However, they did not make the payment. If the recipient is not making payment to the supplier within 180 days from the date of invoice, then they need to reverse the ITC avail. So, what is 180 days from the date of invoice? So, date of invoice is 15th August. So, 15th August. So, in the August month, you take out 15 days, that is 16 days in August. Then September 30, October 31, November 30, December 31, okay, 138, January 31, 169. So, now February, so balance minus 180. So, 11th February is the 180th day. 11th February is 180th day, okay. 11th February is 180 days from the date of invoice. Now, what we need to do for the month of February? We need to reverse the ITC. As the payment is not made, we need to reverse the ITC along with interest at the rate of 18% from the date of availing ITC till the date of addition to liability. So, here they did not ask to compute the interest. Suppose if interest is asked to be computed, we need to do. So, what is it we need to do? Availment of ITC. Availment of ITC on, so 20th of September, 20th of September, and reversal of ITC. So, when 180 days got over, 180 days got over in February next year. So, say this is 2020 and reversal of ITC February next year. So, therefore, for February when we will file GSTR 3B 20th March. So, 20th March 2021. So, from the date of availment till the date of reversal of ITC, we need to compute number of days. What is the number of days? Okay. So, the number of days if you see, so 20th don't take from the next day. So, therefore, in September 10 days, October 31 days, November 30 days, December 31 days, January 31 days, February 28 days and March 20 days, that is for 181 days we need to compute the interest. So, what will be the interest payable? Interest payable will be on the amount reversed. What is the amount reversed? 24,000 into 18% into 181 divided by 365. Okay. So, that is 24,000 into 18% into 181 divided by 365 will be taken. So, that is 2,142 rupees will be the interest that is payable. And this 24,000 reversal is from the credit ledger and this 2,142 is from the cash ledger. Now, they have given another question in this, that is discuss ITC provision if Mohan Limited makes a payment on 18th March. So, as the payment is not made by 11th February, reversal will arise along with interest. Again in the month of March, as and when they make the payment of 2,24,000, they can avail the ITC in the month of March, for which March month they will file 3B in April 20th April when they file 3B. In the 20th April 3B, they can avail the ITC of 24,000, but the interest paid cannot be availed as ITC. Okay. So, they can re-avail the ITC of 24,000 while filing GSTR 3B for the month of March. That is the answer for this question. So, then question number 7. State the condition that needs to be followed by an input service distributor for distribution of credit. It's a generic question, that is what are the conditions to be followed. So, only if the credit pertain to one division, it should be distributed to that division. If it is pertaining to more than one division, distributed to all those divisions which are operational, and on what turnover ratio you need to distribute. So, then previous year turnover or the previous quarter turnover. So, all those theory points related to that we need to write. Okay. So, that is about question number 7, but usually that kind of question and all will not come in exam. Then with reference to the provisions of section 17, examine the availability of ITC in the following independent cases. MBF Limited, an automobile company, has availed works contract service for construction of a foundation on which a machinery to be used in the production process is to be mounted permanently. Shan Constructions, that is, they can take ITC with respect to this works contract service. Generally, works contract service is a blocked credit, but in this case, it is for plant and machinery exception. Therefore, they can take ITC with respect to this. So, generally, works contract service, construction, or any goods purchased for construction of an immobile property is block credit. However, if it is used for construction of plant and machinery, then ITC is available in this case. So, therefore, here ITC is available. However, the plant and machinery should be other than telecommunication towers and pipelines laid outside factory. It is other than that only, so ITC available. Number 2, Shan Constructions procured cement, paint, iron rods and service of architect and interior designer for construction of a commercial complex for one of its clients. Generally, these are all blocked credits. Any goods purchased for construction of an immobile property, but the restriction is only to the owner of the property, not to the supplier. So therefore, they being a supplier, they can take ITC, but whatever money that they charge to their clients, so on the GST, clients cannot take ITC. Then number 3, ABC Limited availed maintenance and repair services from Jaggi Motors for a truck used for transporting its finished goods. So can they take ITC with respect to this maintenance and repair services? So generally, if they buy a truck, they can take ITC, yes. Truck is coming under other motor vehicles. On truck purchase, they can take ITC. Due to that reason, on maintenance and repair service also, whatever GST paid can be taken as ITC. That is this point. Then, wherever you are writing blocked credits, ensure that you are giving reference to section 17, subsection 5. First, you write blocked credit and then you give that this is covered under the exception, therefore ITC available. Like that, you need to present the answer. Then, question number 9. On 25th August, Messrs. Agarwal and Agarwal, a registered supplier of taxable goods located in Bengaluru, Karnataka, purchased one machine for 12,39,000 including IGST from one supplier of Maharashtra who issued the invoice on the same date. Agarwal and Agarwal received the machinery on the same day, availed the ITC. So then Agarwal used the machine in the process of manufacture of taxable goods. Thereafter, they sold this machine to Suresh Kumar of Andhra Pradesh on 20th August of next year for 7,50,000 excluding IGST. With reference to section 18.6, determine the amount payable if any by Agarwal and Agarwal at the time of sale of machine. So as per section 18 subsection 6, here we need to give reference to 18 subsection 6. So whenever capital goods are purchased on which ITC is availed and it is disposed of, we need to take so much of the ITC availed. What is the ITC availed? 12,39,000. The rate of GST 18%. So 12,39,000 into 18 divided by 118, that will be 1,89,000. 1,89,000 minus 5% for every quarter or part thereof from the date of invoice. What is the date of invoice? So use the machine. So here we don't have the information. 1 second. 25th August. First time. 25th August is the date of invoice. So 25th August and 20th August of the next year. So August means it comes in July, August, September, October, November, December, again next year, Jan, Feb, March, April, May, June, July, August. So 5 quarters, not 4 quarters, 5 quarters, 5 quarters, not 4 quarters. So because quarter or part thereof. So July, August, September 1 quarter, October, November, December another quarter, next year, Jan, Feb, March, April, May, June, again July, August. So therefore 5 quarters. For 5 quarters into 5%, okay, that is 25%, 5 into 5, 25%, 1,89,000 minus 25%, 1,41,750, 1,41,750, this is A. ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of disposal. Then GST on transaction value. What is the transaction value of this? So 7,50,000 excluding IGST, rate of IGST 18%. So 7,50,000 into 18%, that will be 1,35,000. Whichever is higher is the GST payable. So therefore 1,41,750 should be taken as the GST payment. Okay, whichever is higher should be taken. Then next question. Question number 10. Krishna Motors is a car dealer selling cars of an international car company. It also provides maintenance and repair service of the car sold by it as also of other cars. It seeks your advice on the availability of ITC in respect of the following expenses. So first we need to check, is it in the blocked credit, and then you need to see, is it used in the course or furtherance of business. So then available, okay, if it is in block credit, ITC not available. So cars purchased, car is a motor vehicle, capacity does not exceed 13, purchased from the manufacturer for making further supply, covered under exception. So motor vehicles divide into two, that is motor vehicles for transportation of persons divided into two, capacity exceed 13, capacity does not exceed 13, car capacity does not exceed 13, and it is covered under the exception that it is used for further supply, so they can take ITC with respect to that. Two of such cars are destroyed in accident while being used for test drive. So if any goods are purchased and which are destroyed, lost, written off, etc., it's a blocked credit, ITC not available in this case, okay. On the two cars ITC, generally cars purchased they can take ITC because they are using it for further supply, but with respect to cars destroyed they cannot take any ITC. Then even if they receive any insurance compensation on that also, the position will be same, they cannot take ITC with respect to that. Works contract service availed for construction of a car parking shed in its premises. Car parking shed, so whether they capitalized it or not, if they charge it to P&L they can take ITC, but they have not given that, so which means it will be capitalized. So generally works contract service or any service received for construction of an immovable property or any goods purchased for construction of an immovable property is block credit. So ITC is not available in this case. That is the answer for this. ITC not available with respect to this car parking shed, and it is not even plant and machinery also. So if it is plant and machinery, ITC available, and even if car shed expenses charged to P&L also, ITC available. Then next question, question number 11. With the help of information given below, in respect of a manufacturer for the month of September, compute the ITC credited to electronic credit ledger for the month. Also compute the amount of ITC to be added to the output tax liability for the month of September. Ignore interest if any. First, they have outward supply of taxable goods 70,000, exempted goods 40,000, total turnover 1,10,000. Now they purchase some capital goods which was used exclusively for taxable outward supply. Can they take ITC with respect to this? Yes, they can take ITC with respect to this, because inward supply exclusively used for taxable, that is capital goods used for outward supply, full credit they can take. Whether they need to do any reversal? No, they don't have to do any reversal. Monthly reversal not required. Capital goods used exclusively for exempted 1,800, they cannot take credit. They cannot take credit. Then next one, capital goods used for both taxable and exempted. Yes, they can take credit. 4,200 they can take credit. However, every month over the next 60 months, they need to reverse the proportionate ITC for every month. Now, what is a common credit here? This 4,200 is a common credit. So 4,200 divided by 60, you will get monthly ITC, that is 70 rupees. In that 70, how much is exempted turnover to total turnover? 40 divided by 110. 40 divided by 110, okay. 70 into 40 divided by 110, that will be 25.45 rupees will be reversed. How much is the ITC avail? 2,000 plus 4,200, 6,200 ITC avail. But for this month of September, how much is the ITC reversed? 25.45 is the ITC reversed, okay. So that should be added to liability. See, here logic is added to liability means if you have balance in credit, you can reverse it. If you don't have balance in credit, you need to add it to the liability. That is the logic behind it, okay. Then next question, question number 12. X, a manufacturer of roofing sheets, is having 1,60,000 as opening balance of ITC for June month. He provides the following information pertaining to the goods and services procured during the month of June. Input tax on raw materials 40,000. The raw material is used for making both taxable and exempted supplies. Can they take ITC with respect to this raw material 40,000? So used for both taxable and exempted, they can take ITC, but proportionately the reversal needs to be done, okay. So already there is some opening balance 1,60,000. So 40,000 first we will take, but that 40,000 needs to be reversed proportionate to exempted. Input tax on catering services procured from harvest caterers in connection with his housewarming ceremony. Catering service is a blocked credit and it is not covered under any statutory obligation, and it is not even inward supply, outward supply in the same category. So they cannot take ITC with respect to this 10,000. Input tax on raw materials used exclusively in manufacture of exempted supplies of 2 lakhs is 20,000. So that 20,000 also cannot be taken as credit. Why they cannot take credit? Because they are using it exclusively for exempted. Okay. So first you can see here what is the opening, like input tax on raw materials. So 40,000 fully we can take. Second one, housewarming blocked credit we cannot take, and inputs used for exempted supplies will be nil. Okay, these are the 3 points. Then next, input tax on cosmetic and plastic surgery of manager of the factory. So cosmetic surgery, plastic surgery, beauty treatment again is blocked credit, but it covers under exception if inward supply, outward supply same category, or statutory obligation, or inward supply part of outward supply. So it is nowhere connected here in the 3 exceptions, which means it's a blocked credit and ITC is not available in that case. Okay. Then, so total taxable turnover for the month of June is 60 lakhs exclusive of tax. Okay. Compute the ITC credited for the month of June to electronic credit ledger. So what is the ITC that we are taking? So total credit that we will take is only 40,000. Okay. And this 40,000 is also a common credit. Why? Because it is used for both taxable and exempted. Now this common credit will be reversed to the extent of exempted. What is the exempted turnover here? If you see here, the total taxable turnover is 60. Then exempted turnover is given as 2. So then 2 divided by 62 we need to reverse. So 40,000 into 2 divided by 62. So that is what? 1,290 will be reversed. How we got this 1,290? Sir, this 40,000 rupees is the common ITC. So into E by F, that is exempted to total. So 2 lakhs divided by 62 lakhs, that will be 1,290 will be reversed. So 40,000 rupees will be availed as ITC and 1,290 will be reversed. Okay. Then what we need to do? First, what is the taxable turnover? What is the taxable turnover? They are asking us to compute the net GST also. That's why. So 60 lakhs is the taxable turnover. On 60 lakhs, what is the GST payable? The GST payable is 18%. Then 10 lakh 80,000. Okay. Then how much is the ITC availed? Opening balance already 1 lakh 40 plus ITC availed 40,000 minus ITC reverse proportionate to exempted 1,290. So the net ITC available for utilization is 1,98,710. This way only we need to do. First we need to take opening balance, then common ITC also we will take, then we will reverse the proportionate to exempted. So then that will be called as a net ITC available for utilization. So that needs to be adjusted from 10,80,000. So 8,81,290 will be taken as the net GST payable. So this is that question related to application of Rule 42. Section 17, 1, 2, 3 read with Rule 42. Then question number 13. Sani Weavers at Pune, Maharashtra is a registered input service distributor and intends to distribute ITC for the month of March. The following are the details available for such distribution. So Ganganagar branch, Madhugiri branch, Kosala branch, Mumbai branch, like that. So 4 branches they have, and turnover for the last quarter data is given and specifically attributable to that branch, distributed to that branch only. But where ISD is located? Maharashtra. Then, so what is their branch in Maharashtra? Mumbai branch. To this Mumbai branch only, CGST distributed as CGST, SGST as SGST, IGST as IGST. Whereas to other branches, everything will be distributed as IGST only. So you need to prepare a table properly. Okay. So, 1 second. So this table, like, okay. So we need to prepare a table properly, or you can write it like this paragraph wise also. So total GST credit of 18,000. So this 18,000 is related to Ganganagar branch, 1233. So will be distributed to Ganganagar branch only, and that too it will be distributed as IGST credit. Whereas another point, Madhugiri, Kosala, leave it Mumbai branch. So it will be distributed to Mumbai branch only as IGST, CGST, SGST. Okay, separately only, because ISD as well as branch is in the same state. Okay, now they have given some common details. ITC available on input service used commonly for all branches, CGST, SGST and IGST. ITC of 10,000 pertaining to March last year was inadvertently not distributed. So can we distribute it now? No. So whatever is related to that month, so that cannot be distributed now. Why? ITC available for distribution in a month should be distributed in that month only. We cannot carry forward and distribute and all. So now what is the ITC here? 60,000 CGST. Now what is the turnover ratio? Turnover ratio 10:5:15:20. So that is total 50. Okay, 10 by 50. 10 by 50 related to Ganganagar branch. 60,000 into 10 divided by 50. So that is 12,000. 12,000 CGST will be given. Okay, so 12,000 CGST will be given. Or what you can do, you can take it total also and you can distribute. Okay, 60,000, 60,000, 1,20,000. Okay, 60,000, 60,000 and 1,20,000. So you take the total. So that will come to 2,40,000. Now the 2,40,000 into, so what is the ratio? 10 divided by 50 into 10 divided by 50, that will be 48,000, distributed as IGST credit to Ganganagar branch, into 5 by 50, 24,000, distributed as IGST credit to Madhugiri branch. Then so Kosala branch also we will distribute the same way, 15 divided by 50, 72,000. However, Mumbai branch, be careful, you distribute it separately, CGST, SGST, IGST. So 60,000 into 20 by 50, 24,000, 24,000 and 20 by 50, 48,000. Okay. So either this way you can do the presentation, or like a table you can put and you can do the presentation. So both ways you will get the marks. Then question number 14, George Private Limited, a registered supplier of goods. So one second, question number, so discuss the ITC provisions if the Mohan Limited makes payment of 2,24,000 to the supplier on 18th March of the next year. Simple, that is whenever we are making the payment after 180 days, as and when we make the payment, we can take that as ITC. So in the month of March, we can take the ITC with respect to this 24,000. That is that point. Then which question I was discussing? Yes, 14th one. George Private Limited, a registered supplier of goods at Kerala who pays GST under regular scheme, has made the following transactions exclusive of tax during a tax period. Purchases, sales, tax rate. Purchases 5 lakhs. Purchases made from registered person in New Delhi. Then it will be coming under, so he is in Kerala, he is making purchase from New Delhi. So interstate purchases chargeable to IGST. So sales 10, then 2,50,000 purchases from registered person in Trivandrum, Kerala, intrastate. So CGST, SGST. So 2,50,000 into 9%. 2,50,000 into 9%. Okay, input tax credit if you see, 2,50,000 into 9% CGST, SGST. Then 5 lakhs into 18%, that will be IGST. So this is the input tax credit, plus output liability if you see, sales 10 lakhs to registered person in New Delhi. So 10 lakhs into 18%, so that is IGST liability will be 1,80,000. Then sales made in Trivandrum 8 lakhs. So 8 lakhs into 9%, that is 72,000, 72,000 CGST, SGST. So we got the liability. And then what is the opening balance of ITC? We have an opening balance of ITC. See this. The company has complied with all the conditions for availing ITC. The following information regarding various opening balances available. CGST 50,000, SGST 30,000, IGST 1 lakh. And this is the opening balance that is available. So then what is the credit of opening balance that they have? So 50,000 CGST, 30,000, 1 lakh. So the total input tax credit is 72,500, 52,500, 1 lakh 90,000. What is that we need to do? First we need to exhaust IGST credit. So when we need to exhaust IGST credit 1 lakh 90, what is the liability we have? 1 lakh 80. We will pay for IGST. IGST credit should be exhausted first. So first we will use it for payment of IGST liability. Still what is the balance left? 10,000. That 10,000 can be used for payment of either CGST or SGST. We don't have any restriction. Okay. We can use it for payment of CGST or SGST. Here it is used for payment of SGST. But it can also be used for payment of CGST. There is no restriction at all with respect to this. Okay. But we need to ensure that the credits whatever already we have in CGST, SGST we are using. Okay. So as CGST 72,500, the liability of CGST is only 72,000. So don't use it for CGST. Why? Because if you use it for CGST, the excess credit will be carried forward with respect to CGST, and SGST there is a shortfall. That's why. So wherever you have lesser credit, to that only you distribute. So SGST credit is less, the liability is 72,000. So you use it for payment of SGST 10,000 IGST. Now IGST over. Now CGST 72,500, we use 72,000 for CGST liability. SGST complete 52,500 we are using. So the net GST payable will be 9,500. How much credit will be carried forward? That also we need to show. SGST we don't have any credit carried forward. Perhaps there is a shortfall. IGST we exhausted. Now the CGST credit carried forward will be 500 rupees. Can that 500 be used for 9,500? No, that cannot be used because CGST credit cannot be used for payment of SGST liability. So this is purely a question related to the manner of utilization of credit. Then question number 15, Quanto Enterprises is not required to register under CGST Act. However, it applied for voluntary registration on 17 September. Registration certificate has been granted to the firm on 25th September. So section 18 subsection 1 clause B, whenever a person voluntarily obtains registration, so then in that case they can avail the ITC on closing stock. So which date closing stock should be taken? When they get the registration certificate, 25th September. So then we need to see what is the closing stock as on 24th September. The CGST and SGST liability of the firm for the month of September is 24,000 each. The firm is not engaged in making any interstate outward taxable supplies. Now, Quanto Enterprises provides the following information regarding capital goods and inputs held in stock by it as on 24th September. Yes, correct only. Because 25th September is the date on which they got the registration certificate. So now we need to take, so 24th September closing stock. But remember, this is section 18(1)(b). In case of 18(1)(b), we cannot take the credit with respect to capital goods. No, impossible. We will not take. It is only for 18(1)(c) and 1(d), composition scheme to normal scheme and exempted supplies to taxable. But in case of 18(1)(a), 1(b), liable to get registered and applied for registration within 30 days or voluntary registered, this will not be applicable. Capital goods they cannot take. Only inputs as such held in stock, inputs in semi-finished goods held in stock, inputs in finished goods. However, this should have been purchased within 1 year prior to the closing stock date. Inputs procured on 2nd September lying in stock. Yes, they can take credit 4,500, 4,500. So they can take credit 4,500, 4,500. Then next, so inputs received on 21st July within 1 year prior only, contained in semi-finished goods. Yes, this 7,500 and 7,500 also can be taken. Then value of inputs contained in finished goods held in stock 2 lakhs. Such inputs were procured 19 September last year. So it is 24th September. 19 September last year means beyond 1 year. So we cannot take the credit with respect to this. 36,000 we cannot take the credit. Okay. Then next one. So inputs valued at 50,000 procured on 13 September within 1 year. We can take this 9,000 rupees as credit. And capital goods we cannot take. So therefore 12,000, 12,000 and 9,000 is the input tax credit for that month. Now there is a liability, gross liability 24,000 each. So this ITC they should have taken. So by filing ITC 1, and here we are assuming that they are making the ITC 1 immediately and they are taking this credit, and we will adjust with the liability 24,000 and 24,000. So CGST, first IGST credit 9,000 should be fully exhausted for payment of CGST, SGST. Okay, and here what we will do, so for payment of CGST, but equally also you can distribute, there is no restriction at all, equally also we can distribute. Then we need to take CGST, SGST credit 12,000, 12,000 and we will reduce. So then we will get net GST payable. Sir, is this the correct answer? Not necessary, there is alternative answer also. What we can do, 24,000, 24,000, na? So 24,000 and 24,000, IGST credit 9,000, 4,500 and 4,500 also we can utilize. And then 12,000, 12,000 we can utilize, so that we will get the net GST payable which is equal. So 24,000 minus 4,500 minus 12,000, that will be 7,500 and 7,500. This is also correct answer. So this is also correct answer. Then what they will see is the total. So 12 plus 13, 12 plus 3 total is 15. 7575 total is 15. Okay, so marks will be awarded. So because there is no hard and fast rule as to how to use the IGST credit. But in the previous question, we need to do the tax planning. Why are we giving 10,000 for payment of SGST? Because there is too much of CGST credit, there is less of SGST credit, that's why we are using. That's a tax planning that needs to be done. But otherwise, when CGST credit, SGST credit is same, so then we will go for equal distribution also. So this answer is also correct in this case. Then another question, question number 16. B&D Company, a partnership firm registered in Nagpur, Maharashtra, is a wholesaler of taxable product P and product Q exempted by way of a notification. The firm supplies these products only in the eastern part of Maharashtra. All the procurements of the firm are from the suppliers registered under a regular scheme in the state of Maharashtra, and they are paying tax under composition scheme. So a person who is paying tax under composition scheme has to come out of the composition scheme as and when their aggregate turnover exceeds 1.5 crores or 150 lakhs. And while computing this aggregate turnover, we need to take both taxable supplies and exempted supplies. P is taxable, Q is exempted, so both we need to count. For the first quarter ending June, what is the total aggregate turnover? So 60 lakhs plus 17 lakh 65,000, that will be 23 lakh 65,000. Okay, for the first quarter. Then second quarter, so 30th September, 50 lakhs plus 17 lakhs plus 50 lakhs plus 17 lakhs. By second quarter, it is 90 lakh 65,000. Okay, 90 lakh 65,000. 1 second. So 60 lakhs plus 17 lakh 65,000, 77 lakh 65 plus 50 lakhs. So plus 17 lakhs, sorry, this will be 144 lakhs 65,000. 144 lakh 65,000 already by 30th September. Now in the month of October they gave a data. In the month of October they gave a data. We need to check when are they crossing 150 lakhs. Already by 30th September 144 lakh 65,000. Now take 1st October transaction 2 lakh 3,000. If you add that, it will be 146 lakh 68. Still they didn't cross. So for 1st October also they will be under composition scheme again. So 1st October one more transaction is there, second invoice, you add that 1 lakh 38,250. So 14 lakh 80,000, sorry, 148 lakh 6,000. Still they will be in composition scheme. Now 2nd October transaction you add plus 1 lakh 6,250. That will be 149 lakh 12,500. So for 2nd October also they will be in composition scheme. And 3rd October, when you add 92,500 to this, it will go to 150 lakh 5,000. They are crossing 150 lakhs on 3rd October. So with effect from 3rd October, with effect from the 2309 invoice onwards, they will be going into normal scheme. The moment, because of that invoice, if they cross 150 lakhs, from that invoice onwards, they will be going into normal scheme. So now up to invoice number 2308, they will be into composition scheme. So which means, what is the date on which they are going from composition scheme to normal scheme? On 3rd October. We need to take the closing stock as on which date? We need to take the closing stock as on 2nd October. but we don't have the data of closing stock as on 2nd October. Why? Because we have the data as on 30th September and 31st October. Then we need to use a simple accounting formula. What is that accounting formula? Opening stock plus purchases. Opening stock as on which date? I need the opening stock as on 1st October plus purchases. Purchases during which period? Purchases during 1st October and 2nd October. Okay. Minus opening stock plus purchases minus cost of goods sold. Cost of goods sold. Which date? So 110 and 210. Then you will be getting closing stock. Closing stock as on which date? 210 you will be getting. Okay. Now, so only with respect to product P we need to calculate. Why with respect to product P? Because product Q is exempted. On exempted there is no GST paid. So the moment when you are going from composition scheme to normal scheme, during the time when you are under composition scheme, whatever GST paid only you are taking as ITC, so product P only should be taken. What is the opening stock as on 110? As on 110, the opening stock 30th September is the opening stock as on 110, that is 10 lakhs. 10 lakhs will be taken plus purchases. Purchases data, if you see, the entire stock of product P and Q available with the firm as on 30th September is purchased during the said half year, and product P valuing 3 lakhs, the said stock, and in current financial year in the month of October no purchases were made. So which means this purchases for October will be 0 minus cost of goods sold with respect to product P. So with respect to product P, for these 3 dates, what is the sales value? The sales is 2 lakhs plus 1,33,000 plus 67,000, that will be 4 lakhs. But we need cost of goods sold. This is sales. What is the cost of goods sold? So all products were sold with a profit margin of 20% on sales. So 4 lakh sales, on that profit is 20%. If you take out 20%, you will be getting 3,20,000. So minus 3,20,000 is cost of goods sold. Now you will get closing stock as on 210. So 10 lakhs minus 3,20,000, that will be 6,80,000. 6,80,000 is the closing stock as on 210. But on that closing stock, we can GST paid can be taken as ITC, provided that closing stock is purchased within 1 year prior. But see this, what they are telling. The entire stock of product P and Q available as on 30th September is purchased during the said half year, within 1 year only, except a consignment of product P valuing 3 lakhs. Then out of this 6,80,000, we need to take out 3 lakhs. Why? Because this is purchased beyond 1 year. Now what is the balance? 3,80,000. So this 3,80,000 is the closing stock as on 210. On the 3,80,000, what is the GST paid? So the rate of GST will be given in the question. So that GST paid on that closing stock, they have not given any rate. So we can take 18%. Okay. 3,80,000 into 18% we can take. 3,80,000 into 18%, that comes to 68,400. 68,400 is the credit that can be availed. That is 34,200, 3,80,000. So this is this question, a very good question, an interesting question. So we need to do these adjustments and we need to arrive at the answer. Whatever is the GST paid on closing stock as on 2nd October. On that we can take ITC, that is this. Then question number 17. XYZ Private Limited is a manufacturing company registered under GST in the state of Uttar Pradesh. It manufactures 2 taxable products alpha and beta and 1 exempted product gamma. On 1st October, while product beta got exempted through an exemption notification, exemption available on gamma got withdrawn on the same date. The turnover exclusive of taxes of alpha, beta and gamma in the month of October was 9 lakhs, 10 lakhs and 6 lakhs. Okay. Now, what has happened is that with effect from 1st October, so with effect from 1st October, there were 3 products. Alpha, beta and gamma. 3 products were there. and before 1st October, what has happened you see. So before 1st October, so one product alpha and beta are taxable. Alpha and beta are taxable. Alpha and beta are taxable. Whereas gamma is exempted when before 1st October. Then with effect from 1st October, what has happened? Product beta got exempted and the exemption for gamma got withdrawn. So beta became exempted and the exemption which are there for gamma so got withdrawn, means it became taxable, and alpha is already taxable, it continues the same. Okay, so this is what the clarity that we need to get in that first paragraph. Now they gave the turnover of alpha, beta and gamma in the month of October. So in the month of October, what is the exempted to total ratio? So exempted to total ratio also we will get, because we need to reverse the capital goods credit, common capital goods credit based on exempted to total na. So exempted to total ratio we need to get. So what is the exempted? Beta. What is the beta's turnover? Beta turnover is 10 lakhs. So therefore 10 divided by total. What is total? 9 plus 10 plus 6, that is 25. 25 will be taken as the exempted to total ratio. Now this also we got. Now the details of their purchases. They purchased in the month of October machinery U being used in manufacture of all three products. Can we take ITC? Yes. Also we need to put it under common ITC. First you take the ITC 36,000. First you take the ITC 36,000. Also you put it under common ITC. Also you put it under common ITC. Clear or not? First you take the ITC. Also you put it under common ITC. Then next one. Next one. Machinery V. Machinery V purchased on 1st October for being used in manufacture of product alpha and gamma. So now in the month of October, alpha and gamma are what? Alpha and gamma are taxable, means used fully for taxable. So can we take ITC with respect to this 18,000? Yes, take ITC 18,000, but don't put it under common credit. Don't put it under common credit. Then next, machinery W purchased on 1st October for being exclusively used in manufacture of beta. So beta is what? Beta for the October man exempted. So don't take ITC at all with respect to W. Then machinery Y purchased 1st October 4 years ago for being used exclusively for manufacturing beta. 4 years ago beta was what? Taxable. Now what happened? So from 1st October such machinery will also be used for manufacturing gamma. So now beta and gamma both are taxable and exempted, which means that it is common credit. So don't take credit now, because at the time when you have purchased long back, so when you purchased beta was taxable, you would have taken ITC at the time itself. So don't take ITC now. Don't take ITC now on machinery Y. But that credit, you put it under common credit. 54,000. Why sir? Why we need to take? See, no need to take the credit, but it will come under common credit for reversal, monthly reversal. Then machinery Z. Okay, so 72,000 machinery Y and machinery Z. Now machinery Z. Machinery Z is what? Purchased on 1st October 2 years ago for being used in manufacture of all three products. Okay, so 1st October 2 years ago for being used in manufacture of all three products, means we would have availed ITC at the time itself. So don't take ITC now. Don't take ITC now. Okay, but just treat it as common credit. 54,000 enough. Okay, then raw material for manufacturing alpha for this month of October, alpha is taxable, so take the credit with respect to alpha, and beta is exempted, so don't take credit for beta, and gamma 18,000 we can take. This is the total ITC availed. Okay, now what is the ITC to be reversed? Common ITC. Out of this, what is common ITC? So 36 plus 54,000 plus 72,000, 1,62,000. That 1,62,000 divided by 60 months. Why? Monthly ITC into what is the exempted turnover? Already we computed exempted turnover 10 divided by 25. 10 divided by 25 we will do the reversal. 1,62,000 divided by 60 into 10 divided by 25, that will be 1080 will be the ITC reversed. Okay, 1080 will be the ITC reversed. So ITC availed is 99,000, ITC reversed will be 1080. Okay, now GST payable, alpha total 9 lakhs, on that 18% 1 lakh 62, beta exempted, gamma 1 lakh 8,000, total 2 lakh 70,000. Now how much is the ITC utilized? Already how much ITC availed? 99,000 minus 1080 you reduce. So therefore balance 97,920 you take out from 2 lakh 70,000, that will be 1 lakh 72,080 is the net GST payable. Okay, so that is this 99,000, this 1080 should be reduced. So then it will be net ITC available for utilization. That net ITC available for utilization needs to be adjusted from the gross liability 2 lakh 70,000. You will get the net GST payable. Okay, yeah. So that is with respect to this. For remaining questions, can you try pa 18 to 25? Sure, okay. So I have done. So today itself you take some time. So that is up to 18 I did, 19, 20 and the 5 questions. Total 7 questions are there. Those 7 questions today itself you complete it. So tomorrow's class you ask me if you have any doubt with respect to any question, I will repeat that question. Okay.